So the purpose of this show is to give you, the people and my future home buyers and even agents, transparency. Okay, the transparency to, number one, know what's going on. Number two, pick and customize the right mortgage product for your unique situation. And then three, help you pay off and manage the mortgage correctly in a way that optimizes your future net worth goals. Okay, those are the three things that I look to guide this channel. That's what drives everything here. And this is what I base my engagement process with you off of. So if I'm gonna help you with your money, I'm gonna show you how I make mine, because a lot of you ask me this and it's a very valid question. We as loan officers are paid very similarly to real estate agents. So like them, I make no base salary. I never have. Loan officers, we only make commissions when loans close. I don't make any money for talking to people, giving anybody advice, making these videos, nothing like that. Just like agents only when they close a home. So they usually make 2.5% to 3% of the sales price of the home they close. And that percentage depends on the market they're in. I, as a loan officer, right now, I make 0.8% of the loan amount that I close. That can vary throughout the industry. I think the industry average is somewhere between 0.75 and 0.9%, maybe even a full percent. But just to show you as an example, making 0.8% of the loan amount, if I close a $400,000 loan, I'll make $3,200 gross income. That's before taxes. And that's purchases and refinances, okay? We do also get paid when you refinance a loan and that closes. That new loan amount that the refinance loan comes out to is then what we get paid on. So if you've been paying that down a bunch, then my commission is going to be a little smaller. If that loan amount is about the same, then my commission is going to be about the same as when I helped you out when you purchased originally. But that's it. That's what I get. I just get a one-time payment. I don't make any money off the interest in the future that you're paying on the loan for every month. That all goes to the final loan investor. More on that in a minute. And very important, I can't make any more money from a closing based off of the amount of points you pay or the extra closing costs you pay us to buy down your interest rate. I can't make any more money based on what type of loan you get or what interest rate you end up getting, okay? We are strictly paid a percentage of a commission off of your loan amount, okay? And this is done to make sure that there's no steering in the industry, okay? If loan officers got paid, let's say, more to give you an FHA loan than a conventional loan, then it could corrupt some into wrongly guiding you into that. Or, somebody wanted to give you an ARM over a fixed loan because a loan officer would get more of a commission for that. That doesn't exist. These commissions are strictly based off the loan amount that you get a loan for. And remember, like I told you in Where the Interest Money Goes, mortgage companies sell like 95% of their loans to Fannie Mae, Freddie Mac, Ginnie Mae, the federal loan agencies. Okay, mortgage companies sell loans off to the agencies in packages where they agree to sell the interest rate package for a set amount of money over the life of that loan, as long as it lasts. So the mortgage company then takes that money to pay me, the loan officer, and then the cost that it took to create the loan, the cost of underwriters, processors, keep the lights on at our offices, stuff like that. And then after that, the loan company has a bit of a profit after paying me and their other costs. But to be honest, mortgage companies don't even necessarily make profit off of all the loans they serve. There's times like right now where they're losing $1,000 or $2,000 off the origination of every loan. However, if the mortgage company does keep servicing of the loan, aka the payment collection rights, they do get to keep a small sliver of that interest every month for promising to manage that payment collection now. In the future, if you have to deal with late payments or foreclosures or just all kinds of nonsense, customer service, there's a cost to that for the mortgage company to service your loan too. But long story short, that's how it's done. Any questions on any of that, please leave them in the comments, and I'll see you on the next one. Thank you very much.